Today we're going to be talking about some of the best dividend stocks that you can get into in 2020 and how they can help make you some passive income. Now let's dive into it. What's up guys, it's Kai here. Welcome to my channel where I talk about money, finance, and entrepreneurship. Today I'll be talking about some of the best dividend stocks that you can get in this market condition in 2020 that'll also help you make some passive income. So very quickly, let's go over what dividends are. So dividends are a way for companies to redistribute their revenue towards their stock owners or their investors. And they normally pay out per share. So if a stock has a dividend that's $3, for every share you get, you'll get paid $3 a year. Now they're normally paid out quarterly in the United States. So every quarter you'll get a fraction of that $3, regardless whether the market is going up or down. Dividend stocks are good for a bunch of reasons. One mainly being that they provide a good solid stream of passive income. Companies are not required to pay out dividends, but companies with like a long history of paying out dividends tend to uphold that pattern. So dividends not only provide you with a good stream of passive income, they also help you out twofold. So say for instance, a stock is paying out 3% dividends and the market goes up 5%. You get your 5% and your 3% on top of that, 8%. That's awesome. But it also protects you if the market's headed down. So if the market drops 5%, you still get paid out your 3% dividend. So you're only taking a 2% loss. So in times of market uncertainty, you'll be consistently getting your dividend payouts regardless of whether the market is going up or down. Alternately, you could choose to reinvest your dividends and exponentially grow your returns over time. Here's a quick update for those following from my last video. Here's how I'm doing so far. I'll post the results here. So as you can see, Boeing looks like they're doing pretty good. I think because they just did that stimulus package thing or they're working on it. I'm taking a loss on Carnival Cruise Line so far. I bought when they're a little higher and I've been buying a little more when they've been dropping, but my average is still about $15 a share. Currently they're trading like at $13. Chevron's doing pretty good. Delta Airlines doing pretty good. Again, I think that's because of that stimulus package that they just did. Facebook I just had on there because I've been investing in them for a while. Dave & Buster's is up pretty good, about 73% so far. Tesla's also looking good as well, 20%. If you'd like to stay updated, please hit the subscribe button and the notification bell to stay updated. Also, please give the video a like. It'll help with the YouTube algorithm. All right, now let's hop into the first dividend stock, which is AT&T, ticker symbol T. Now, AT&T is looking really attractive right now, offering a 5% dividend yield. And they've been increasing and paying out this dividend yield for over 30 years. AT&T is the largest communication company in the world, providing mobile, video, and broadband communications to over 100 million US customers and 3 million businesses. They recently acquired Time Warner Media, which is like HBO and Warner Brothers, and they generated over $170 billion in revenue last year. So they have plenty of free cash flow right now, especially in times like these where everybody's self-quarantining and social distancing. Nobody's going to be canceling their cell phone plans or their broadband internet plans. So they're looking really good right now. So this is a 5-year trend here. Seems pretty steady across. Let's just draw some general lines here and here. Currently today it's trading at $28.40 at this time. So if you buy it here, and it goes back to anywhere in this normal range, you'll be making 30% on your return. And also don't forget about that 5% dividend that you'll be getting regardless whether this stock goes down some more and up again. And remember now, during these times, I don't see people getting rid of their cell phone plans or broadband plans or even stop watching TV. If anything, they'll be watching TV or using their cell phones even more, making this a real solid dividend pick. All right, now let's hop into the next solid dividend stock, which is Coca-Cola, ticker symbol KO. Now, Coca-Cola offers a dividend yield of 2.8%, which is higher than the average S&P 500 rate of 1.7%. Now, Coca-Cola is a dividend king. They have been paying out and increasing their dividends consecutively over the past 50 years. They are a strong global brand and they account for 50% of the soft drink industry. And they're branching out into other things like water, Monster energy drinks, giving it a nice solid place in today's economic environment. It's safe to say Coca-Cola will be around for a long time. Okay, let's check out this one. Ticker symbol KO, Coca-Cola. This is a 5-year trend. Seems like they've been going up for the past 5 years. So let's put like a little channel here and then here. So projected maybe anywhere in this range it could go back to normal. So today it's currently trading at $41.60. So if you start here and it starts to recover, you could be making anywhere from 22% if things get back to normal. On the bottom, 15%. Also, Don't forget, they've been paying out dividends for over 50 years. So again, regardless where it goes, you'll still be making that 2.8% return. All right, next, let's hop into the next super solid dividend stock, which is Lowe's, ticker symbol LOW. Now, Lowe's has been consistently increasing and paying out their dividends for over 50 consecutive years now. The company is founded back in 1946. It's over 73 years old. And they have grown to be the second largest home improvement retailer in the United States, only second to Home Depot. The company operates over 2,000 stores in the United States and Canada and has made over $72 billion in revenue last year. Now, Lowe's being in the home improvement category, I feel they'll weather this storm here, especially with the things that they sell, home improvement things. If something breaks in your house, you want to go to the store and get it. It's not like all the other retailers where Amazon's taking them down. Everybody's choosing to order things online. You know, if I want to fix something and get a 4x8 plywood or some drywall or 2x4s, I don't think go to Amazon or order it online. I'll run to Lowe's. Okay, so I think Lowe's will be around for a long time, especially since everybody's stuck at home. Maybe their home projects will finally get done. Now let's take a look at Lowe's real quick. Ticker symbol LOW. So they've been trending up for the past 5 years. Just draw like a channel here. Nothing too technical. That's the general projection there. Looks like Lowe's took a nice jump today, about 8.3%. They're trading currently at around $83. So if you start here and it goes back to normal, you hit the bottom of the line, it'll be like 20% gains. Any place in here is a nice solid 30% gain if things go back to normal. Again, even during this time, Lowe's essential. Toilet leaks or your walls break, you got to go to Lowe's to grab something. Also, if people are forced to stay home, seems to be like a nice time to catch up on that honey-do list and get started on home improvement projects. The next one coming up is a household name around the world, which is McDonald's, ticker symbol MCD. Now, McDonald's paid its first dividend in 1976 and has been consistently paying them ever since. They've been paying out dividends for over 4 decades. Currently with a dividend yield of 3.65%, and it is the largest publicly trading food company in the world. McDonald's is huge, so it allows them to keep their prices down and is one of the most widely recognizable brands in the world. So they've been consistently increasing their dividend payout, and they have a very solid business model. Especially in times like these where the economy is going down and people are quarantining, there's no dine-in restaurants, but McDonald's is still open. Also, their prices are cheaper, so if people are having a hard time with their money, McDonald's would be a prime option to just drive through and get a burger and the Coke. Now here's a look at ticker symbol MCD, McDonald's. Looks like it's been growing for the past 5 years. Put a nice channel here. Today it closed at $163-ish. You go here and it went back to normal. That's a 20% gain. Any place in here is 20% gains. Looks like a nice solid buy. I'm loving it. And again, they've been paying out their dividends for over 4 decades. So regardless if it goes down some more, you're still cushioned because they give a 3.65% return. I'll touch up on another quick one, but I covered it extensively in my last video on how to double, triple, or even 10 times your money. It's Chevron, CVX. 135-year-old company, solid dividend stocks. They've been paying out dividends for over 30 consecutive years. They just hit a 10-year low. Seems like a nice prime time to hop in to take advantage of doubling your money and also taking advantage of their solid dividend payouts. I'll put a link to my video somewhere here if you want to go ahead and check that out. All right, guys, thanks for watching the video. I hope you liked the video. Be sure to subscribe and hit the notification bell to stay updated for my next video. Please go ahead and smash that like button. It'll help out my channel. And let me know what you think about dividend stocks or any other type of videos that you guys would be interested in. All right, guys, see you in the next video.